Hello and welcome to today's video. Let's just understand the transaction here. A company borrows $10,000 on April 1st, and then they're not going to repay this loan until January 31st. And at that time, they'll pay the $10,000 they borrowed, plus the interest. So they're not going to be making monthly payments. They're not going to make any payments. This helps companies with cash flow. Sometimes they may get lenders that tell them, you have to pay the interest, but you have to pay it till the end. So it kind of helps them up front with cash flow. Let's just go through and kind of track what's happening with this loan through journal entries. So we will start with April 1st, and this would be an X1, because this is when they took out the loan. So when they took out the loan, the company will debit cash and credit notes payable or loans payable. Either one is fine, and that is $10,000. And then the only thing that's going to happen, they're not going to make the payment. They're not going to pay this back until January of X2. However, on December 31st of X1, we have to issue financial statements. And the purpose of an adjusting journal entry is to say, even if I haven't made payments, are there any expenses I have incurred that I have to accrue for? And you can see that I have the cost of borrowing money, that $10,000. I have an interest, and even if I'm not going to pay it, I have to show the expense because I've consumed it by using this money now. So I'm going to record an interest expense, and instead of cash, I'll just put interest payable, and then I'll pay it when it's due in January. So how much interest has accrued? I borrowed $10,000, and the annual rate is 14%, which is given right here. However, since I took this out in April, and it was April 1st, that's important to note. So I borrowed the money all of April, May, June, July, August, September, October, November, and December. So 9 months out of the year is how much I owe on that interest, which is $10.50. So debit interest expense, $10.50 credit interest payable. And now I'm going to come to January 31st. So the end of January X2, and I'm going to pay off this loan, but I have to pay off any interest. And now I've accrued more interest every single day. I'm accruing interest until I pay it off. And so I need to figure out, so what's the interest in January X2? Well, 10,000 times the annual rate, 14 times, and it's just 1 month. It's all of January 112. And when I get that, it's 117. So I need to record interest expense of 117, and I'm not going to set up an interest payable because I'm going to pay it right now. So if you actually see my credit to cash of what I'm going to pay 1101.67. Well, what is that? That's the interest expense of 1174 January and the interest payable because you have to pay them everything you owe. So if I was doing this journal entry, I'd probably record debit interest expense 117 to show that I'm going to pay the interest payable, and then show that I'm going to pay the notes payable 10,000, and then I would record the cash, which is how I balance to 11,967. This is the journal entry to record both the interest accrual for the period, paying off the interest, and the note. If you found this video helpful and would like to see the next educational videos, please subscribe and give it a thumbs up. Additionally, if you have any suggestions for tutorial topics, please write them in the comments. We look forward to your feedback and suggestions. Thank you.